Morning, everyone. This is Paul with Gamma Edge. Today is Thursday, the 12th of May. Let's get started. Hit pause, read this, please, and when you're done, go ahead, hit play. Starting with the overall gamma index conditions, we did see a lot of negative gamma added to the SPX complex yesterday. No real measurable change on the call side. So short term, there is some downside expectations, and hence the increase in net negative gamma across the board. The SPY is showing a mixed picture. We had some increase in the net negative gamma due to the put additions, but we also had call additions. So there's a battle going on. People are anticipating a potential reversal in the SPY when we see these calls being added. But obviously there's a lot of downside protection being put in place with the increase on the negative side. Qs actually reversed just a little bit. We had a increase on the net negative gamma, and we had a decrease on the net positive. Not a large amount, but you can see that for the Qs, the upside calls are just almost non-existent here. They're very, very low. Contrasting, the IWM is actually, for the last couple days, has been showing a little bit of thawing here. Not so much on the call side. It's almost a flat line, and you can see the levels are virtually non-existent again. But we are seeing some monetization of the puts, which is dropping the net cumulative gamma on the left side here. And so what this is telling us, still very much a mixed picture. We can go either way. I don't think we're out of the storm. But certainly it is worth bear watching. We're not leaning all one side to the ship or the other. So there is some indications of transition occurring. When we take a look at the near-term expiries, the black dot signifies where we are in the overall structure. And you can see that the dominant structures, I've called them out for you. If we move to the left of these, we now transition in the expiring index, or in the ETFs, we move to an in-the-money status, and that flips, the moneyness there flips in terms of the delta impact. And so as we go further and further in the money, the folks who are holding these puts are watching their deltas go towards -1 limit, and they're gaining money due to convexity. And it increases every time they cross a major gamma level because the acceleration of that gamma due to the convexity is present. That forces the dealers to have to adjust, and what we may end up seeing, I know we've been saying this all week, but it's important to watch because when these reversals do occur and the dealers do adjust, especially coupled with a decreasing volatility, we can actually see a huge reversal and something to play off of. So the key levels for the SPY, the Qs, not so much the IWM, but it's there. And of course, SPX here at 3,900 are all shown. Note the 3,900 expiry has become dominant. It's also become dominant overall in the SPX, which I think is very, very important, especially if we get trapped below it. So we'll want to watch for that. Taking a look at the overall histories, a couple things are evident here. We had a slight uptick in the zero gex. In general, that is indicative of calls being added or puts being closed. Interesting to note that negative gex has also dropped, indicating that we had some monetization go on in the SPY yesterday. So this is slightly bullish. I wouldn't say we're ready to pull the trigger, but just watching this setup is interesting. The Qs, we closed below POI here, and as I've said here in other forums, we don't stay there for too long. Same thing over here with IWM. The key here is that this typically resolves within 5 days. You can see that there is the potential for some upside. Now, one thing that's working against us is that we had positive gamma or positive gex, the dominant level, shoot up. That's typically due to some monetization that occurs, or that these were closed, exposing a higher level. So we're going to want to watch that. We didn't get a move in COI or the zero, so I don't think the move is very strong. We'll want to watch and see what happens here today, see how this resolves itself today and tomorrow. Taking a look at the flow summary, the key takeaways here is that on the 30 days, looking out at expiries, relatively short term, just the next 30 days, we had calls being closed. We did start off with puts being closed early in the day, relatively flat, and then we saw puts being opened. We saw them reverse again, premia being closed, and then ended the day up slightly off the lows of the day. Overall, TradyTix is counting this as a net positive day, not very strong, but just be aware we have a lot of things going on. We are seeing some monetization, and we're also seeing some new additions. In the open mic last night that we had for Gamma Edge in the Discord, we did show that we do think a lot of this is being rolled out. If you're interested in how to do that, come on in and ask some questions, and we're happy to walk through that. Over here in the queues, right out of the open, we saw a number of puts being opened up. That's this increase that we see here, slowly increased throughout the day, and then we saw monetization back to almost the starting point. That's what's given rise to this, what TradyTix is saying is a net positive on the day. Also look here though, we had calls being steadily added more or less throughout the day. So this is a continuation of a pattern we've been seeing in the queues. There is a anticipation of an upside that is going to occur. IWM is really hard to read. The values here are basically showing monetization, addition of puts, and then some more monetization or closing, rolling things out. Overall, again, the algo is saying that this is a net positive. We are seeing some thawing in IWM, as I said earlier. We might see something coming around the curve within the next couple days or early next week. We'll just have to wait and see how this plays out. The market model, we ended at the low of the day in the cumulative tick. This is the ARCX, which is the NYSE, the NASDAQ, and the Amex. Remember that the Amex contains both all the option flows and transactions, as well as the ETFs. So we call this the quality cumulative tick. It's pretty clean, as you can see. We've been in a steady downtrend. Effectively, we're looking to see a continuation and then a reversal. I'm not wanting to see a reversal immediately out of the open. I'd like to see it continue down, try to get some form of capitulation, and then see a reversal up intraday. We'll just have to wait and see if that occurs today or tomorrow. I'll note that we are in a longer-term downtrend. The down leg started on April 1st and then was confirmed on April 6th, and here we are, in May, still experiencing this. It's been a very good indicator, keeping us in cash or keeping us playing on the downside. Taking a look at the SPX structured zeros, I will note that the majority of these have come down, and when these are coming down towards spot, typically that's indicative, especially since this is delta as well as gamma. Puts being added, calls being closed, combination of both. Typically a fall of all of these numbers towards spot price typically is indicative of bearish behavior, and so looking in the rearview mirror, we continue to see the complex getting heavier and heavier, and it's not abating. So that tells us for the short term, gamma and delta are negative and are pulling the complex down, and we want to play that accordingly, meaning short the rips until we see otherwise. Taking a look at the ES. The ES is a single expiry, as you guys are aware. It's the June 22. Takes out some of the diffusion that we get when we look at multiple expiries. What's important here is that we're actually seeing some short-term bullish signs develop in the ES. And I've got the details here. I urge everyone to read this. Now, we're early, And as you can see, VIX is still quite elevated and has been heading up and down over the overnight session. But we're starting to see, again, for a single expiry out in June, we're starting to see some thawing and some potential stabilization here. So we want to watch this. And as some of the folks in the Discord have indicated, we're actually seeing TLT and some of the longer-term bond funds actually start to reverse, which also is bullish. So we're going to want to pay attention here and look at this. There are signs of potential thaw in the ice here. The SPX structure, nothing really new here. Extremely negative. The positive is not really grown, maybe a little bit. We got a little bit more up here at 44.50, but other than that, you can see the transition area here. 41.80 is the bottom of the transition zone. We're going to open somewhere down here, maybe a little higher than 39.10, maybe 39.30 or so. I will just draw your eye down here. 3,900 has become the dominant strike, and it's taken it away from 4,000. So we're seeing a lot of puts being added down here, which is going to pull us down until it doesn't. The expiration profile, relatively unchanged on the monthly. This is the AM and the PM settled. I will note, compared to yesterday, we've almost doubled here for Friday's expiry. This could provide fuel into next week, especially coupled with a decrease in Vega, which will reduce the cost of options, and that will potentially create some Vanna flows. We have Charm obviously coming into this also, as those puts, heavy puts that are existing in the SPX just decay over time, and that will also influence some of the movement that the dealers have to make in their adjustments, possibly pushing prices up into the close or into the expiry. So we'll just have to wait and see how that pans out. Beyond this, though, you can see, aside from the addition now of the Thursday expiries, looking forward here, not a lot going on. This is the end of the month here. This Tuesday, remember, Monday is the holiday, so we'll have a long weekend across here to contend with also. Looking at the 1 DTE here, basically strong level, as I just said. The blue lines here indicate the expected range. This is an open high-low close, not a close-to-close, as some people do. Take a look here at this transition area. Just keep your eye on that. I've highlighted major delta levels that I think are going to be adjustment levels to move through. This is notional on a $1 change in the underlying, so fairly significant net delta dollars to plow through as we go up and down the strike chains here. What's key here is that the 4,000 level is dominant, so getting over 4,000 opens the push, but this is the expected upper range, which is a conservative value that we use. To the downside, you can see the 38.20 to the downside is a possibility, and just given where we are and perhaps where we're going to open up today, this is very much in play for tomorrow's 1 DTE. So just keep an eye on this structure. Look at these major levels here as being sticky levels. I do think you can play to the downside off 4,000. I also think you can play to the upside, certainly as we come into some of these major levels, more so on this next page here. So this is the combo. This is the AM and PM settled. We do not include the SPY. The SPY is not in here. This has not changed much from yesterday. That's a big deal. Stabilization of the net GEX shows that overall net negative gamma is not changing. The put structure is fairly intact and stable. When we see that, we're at a pausing level, and this is extremely negative here, so we want to watch that. Looking down here at Circle 2, basically between now and next Friday, we're looking at about 29 to 30% net expiry for the SPX. That's between $1.5 and $2 trillion, depending on where we are. That's a big deal too. So that money has got to get redistributed somewhere, and where it goes is going to be very, very important for our behavior beyond the expiry. Circle 3 here, and all these highlighted areas, especially this one here at 4,000. This is $71 billion net notional here. This is a very large amount. It's coincident with POI, the put open interest dominant here in the SPX. Why that's important is this is going to be a significant level to get above. I don't see a close above this level, but certainly we can try to push and play around intraday. Again, the blue bar showing what the expected range is for today. I don't think we're going to get up here to 4,100, but I just call it out because it too has a very, very large delta notional. 3,900 delta notional, pretty large, but it's also negative gamma for negative GEX for the overall complex. So I think we're trapped under 4,000. If we go below 3,900 fairly early, you can see there are a couple major levels here on the quarters. At 75 and 50, but the key here is that these are very dominant levels, and so as we go through these levels, think about getting trapped in the boundaries between them. So watch these as you play out today, and that'll help inform which direction you should be looking at. Taking a look at what should we be considering. This is not predictive. These are just setups that you should be looking at and be prepared for. A couple comments came in on that, and all we're trying to do is just highlight some of the things that could have a bull case as well as things that could have a bear case. So first thing is the ES is showing signs of stabilization. Just be aware of that. The Qs are mixed but are continuing to show the calls building out. But also note too that the Qs are below the POI, and historically this has not lasted a long time. We've got these large delta levels, as I was just explaining, with combined with these major Livermore strikes. Those will be dominant, and then Friday's expiry continues to grow, which I think is a good way to describe this as coiling the spring. So different plays that you can do here, and of course within the Discord in the AI channel you can run this command here. Did modify it a little bit to remove some confusion for folks with the addition here of 1 and 30, so you'll be able to look at the short-term flow distributions there and see what's happening. On the bearish side, cumulative tick, it goes without saying. We've been in this downtrend and we remain in the downtrend. The CT ending at the low of the day values is not constructive to an upside move that lasts any length of time. So in this case, I think you can short the rallies and also look for those failures to occur. I think personally, I'm continuing to play downside off the 4,000 strike. Until we break through it, it comes down from above and holds. Until we get a reversal where it becomes support, I'm going to continue to short the 4,000 strike. The other levels that are shown, the Livermore levels, and as well as the levels that are shown here, go ahead and play those as according. Note, there's not a lot below us, right, in terms of key gamma. We've got a lot of zeros above us. We've got a lot of key strikes ending in 0 or 5 that are the primary levels on the charts, but not a lot of support except on the quarter levels as we go down here. So getting very, very oversold, but it can persist, so don't fool yourself. So that's it for today. If you like this and you have additional questions, feel free to come and join us at GammaEdge.us. That'll take you to a sign-up page. It'll get you into the Discord. It's a 14-day free trial, no risk to you. All the tools turned on. Lots of opportunity to engage others and learn about how to apply this stuff to what you do. Follow us on Twitter, please, at GammaEdges with an S. And then here on YouTube, if you like today's content, please push that like button. And please subscribe so that we can notify you the next time we post something. So that's it for today. I appreciate everyone getting to the end here and following. Hope to see you in the Discord, and good luck to everyone. Take care.